Welcome to this brief video for accruals and prepayments. Follow the processes, that's one of the biggest tips. Follow the processes we see here and hopefully you shouldn't go too far wrong. Remember, the balance carried down is always on the opposite to the balance brought down. So you'll see here we've got the balance carried down and the balance brought down in blue. So let's start with prepaid expenses then. Remember to start with the opening balance and reverse the prepaid expense. So you see here we have the balance brought down and the prepaid expense. Let's reverse that entry first of all. So we'll take the prepaid expense from the prepaid expense account and move it to the debit side of the expenses account. So we're crediting prepaid expense, debiting expense. So that's that figure reversed at the beginning of the year. Next, then we'll deal with the events during the year, so the bank. So we're going to debit expense with any expenses we pay out to the bank and credit bank. Next, then we'll deal with any prepayments at the end of the year. So we're going to credit expense, debit prepaid expense. We'll now balance off our expense account. Now we've dealt with the end of year adjustment. And the balancing figure is the figure that's going to the statement of profit or loss. And this represents the expense for the year, not necessarily the expense paid from the bank. This is all to do with the accruals concept and us accounting for amounts that relate to the year we're dealing with and not necessarily the year in which expenses are paid. Next, we can deal with the closing off the prepaid expense. So we'll balance off our prepaid expense account. Our balancing figure, our balance carried down, is carried down from the credit side to the debit side, and this represents a current asset. It's very much like a receivable, a trade receivable. We paid up front. Think of it as if we paid up front, we could get our money back. At the start of the following year, then what we're going to do is reverse that prepaid expense. So we'll credit prepaid expense and debit expenses. That's the full cycle for prepaid expenses. Next then is accrued expenses. We'll follow it through step by step, just as we did before. Start with the opening balance and reverse the accrued expense. So you'll see here, we've started with a balance brought down on the credit side. That represents a current liability. It's something that we owe at the beginning of the year. So we'll debit the accrued expense account and we'll credit the expenses account. Next, then we'll deal with the events during the year. So here what we'll do is debit the expense account with whatever's paid from the bank and obviously credit the bank. Next figure then is any accrued expense at the end of the year. So have we incurred an expense that we haven't yet paid for? If so, that's an accrued expense. We're going to debit expenses and credit accrued expenses. We can now balance off our expense account for the year. And our balancing figure will go to the statement of profit or loss. And this represents the expenses for the year. Let's balance off our accrued expenses account. And the balancing figure is carried down to the credit side of the accrued expenses account. It represents a current liability at the end of the year. It's a figure that we owe at the end of the year. It's a payable. Finally, then we can reverse this accrued expense when we move into the new year. So we'll debit accrued expense and credit expenses. So now we're going to deal with prepaid or deferred income. We'll start with the balance brought down. Balance brought down is on the credit side of the prepaid income account. This represents a current liability. So we've been paid the money before it was due, so consequently, in theory, we could have to pay it back to our customer. So therefore, it's a liability. It's like a payable. So first thing we're going to do now is reverse the opening balance. So we'll debit prepaid income and credit income account. Next, we're going to deal with the income during the year, so credit income and debit bank. Any prepaid income at the end of the year is debited to the income account and credited to prepaid income. Next, we can balance off our income account, and our balancing figure will be the statement of profit or loss figure, so it will be debit income, credit statement of profit or loss, showing the income for the year for that account. Next, we can balance off our prepaid income account, balance carried down and brought down, the brought down representing a liability at the end of the year. Finally, then, at the start of the new year, we can reverse that prepaid income account like so. And that's prepaid income dealt with. The final slide deals with accrued income. So we start with a balance brought down on the debit side. This represents a receivable, a current asset, and it's income that we're owed, but we haven't yet received. So to reverse that entry, we will credit accrued income and debit income. Next, we can deal with the income into the bank during the year. So it will be debit bank and credit income. Our next figure then is any accrued income at the end of the year. So we can credit our income account and debit the accrued income account. And remember, that's only the income that's been earned during the year but not yet received. We'll balance off our expense account, our income account, with the figure, the balancing figure, going to the statement of profit or loss. Next, we can balance off our accrued income account, and the balancing figure is carried down to the debit side in the new year. Again, this represents a current asset, a receivable. So at the start of the new year, then, we can clear the accrued income account by crediting the accrued income and debiting the income account. That completes this very short series of slides on accruals and prepayments. Hopefully it's put things into perspective and helped you to understand what's going on.